I think woke liberals are likely the only people who apparently enjoy paying taxes. For the rest of us normal folks, we are all looking for ways to legally and legitimately reduce our tax bill each year. In this episode, we're going to dive into one of the most legitimate tax loopholes you can find, called the Augusta Rule. I'm Nate. I make sense out of money. This is Dollars and Nonsense. If you follow the herd, you will be slaughtered. So the question for the day is the Augusta Rule a legitimate strategy to reduce your tax bill each year? And, so I'm going to dive into what the Augusta Rule is and some of the pitfalls that I've seen from afar of people trying to implement this, and kind of my own personal story with Augusta Rule. And the reality is, I think if you've been on social media, YouTube, whatever it is, you've heard of this Augusta Rule more. It's gaining a lot of steam, by the way, in a lot of social media style financial influencers. And so this is what the Augusta Rule really is. It's a perfectly legal loophole, you could say, in the tax code that allows homeowners to rent out their home for up to 14 days in a year and not pay rental income, or not counted as rental income. So owe no taxes on it. So if you own a home, it is perfectly within the IRS code, perfectly legal, perfectly legitimate that you can rent out your home for up to 14 days in a year and not count it as rental income. It's kind of like the IRS saying, hey, this is like our freebie to you. You don't have to start like being taxed as if you're in a rental business if you're only going to rent your home out for a couple of weeks. And the reason why it's called the Augusta Rule is because this really took place around the Augusta golf tournament, right? The Augusta Championship. And in the people in the surrounding area, they would start renting their homes just for the week of the golf tournament. They would just rent out their home for 1 week. And that's why it's called the Augusta Rule, is that a lot of the income, because they were able to charge ridiculous price. I mean, by the way, I remember when I have a whole bunch of family that lives in Tulsa, Oklahoma. I actually own an Airbnb now in Tulsa, Oklahoma, which I'm going to talk about in a minute. And in Tulsa, there's an occasionally a PGA Tour championship in Tulsa, Oklahoma. And with that being said, my grandparents own a home in Tulsa. They live in Tulsa, and they were able to rent their home, which would typically rent for like $200 a night, like on a typical like Airbnb style platform, something like that. They were able to rent out their home for like $1,000, $1,200, $1,500 a night for all the influx of people coming in to watch and attend this golf tournament. And that's the idea of the Augusta Rule, is that people were able to get they were able to rent their house for the week with a huge rental price per night and get all of that income tax free. And so the Augusta Rule, perfectly legitimate. Where the angle that starts that people are actually talking about these days is the fact that most people are in CPAs. And by the way, before I dive into my thoughts on it, just know I'm not an accountant. I'm not a tax professional. This is financial entertainment. This is education, freebie by Nate, a lay person in regards to taxes. So where the rubber hits the road for most people is that if you own a business, whether that business is operating like Living Wealth, let's say, in the insurance business, or whether it's just simply like an investment business and you own real estate and you're investing through LLCs or something like that, what the idea that most people are presenting is that your business can legally and legitimately rent your personal residence from you for up to 14 days a year, and your business can expense that rental agreement that you have between you and your business. And so it's a perfectly legitimate rent expense for the company, but you personally, due to the Augusta Rule, don't have to claim that rental income as income as long as it's only for 14 days or less. And the reality, the reason why people are doing this is because they're trying to get away with charging a high amount of rent for the houses. So this is where some of the pitfalls go. So everything's perfectly legitimate. Your business is perfectly legitimate to go out and rent your home from your rent your personal residence to host a meeting. You can have your board meeting there. You can have staff meetings there for a day. You can have like a company retreat there for a day. Even if it's just you and your spouse, you can do these types of things, and it's perfectly above board. Where things start to get gray is the fact that the rental agreement between you and the company, your business, has to be reasonable. And of course, anytime in the IRS code where there is some sort of statement that something has to be reasonable, that's the gray area that people try to take advantage of, right? There's no question. A reasonable, like there's a similar kind of quote unquote tax loophole, which is why many people choose to run their business out of an S corporation, elect to be taxed as an S corporation as opposed to just like a partnership or a sole proprietorship or a C corporation. Most people choose the S corporation because if you had for instance, if you had a partnership or a sole proprietorship and you're out making money in the world, all of the income that company makes is subject to FICA taxes, to employment tax. And so you would get, if a business owner, you not only have to pay the employee share of FICA taxes, Social Security tax, Medicare tax, you also have to pay the employer share. So essentially, if you make $100,000 in business, you have to pay 15%, which is both sides share of that income, just straight to FICA tax, when self-employment tax, essentially at that point. So they say, well, go ahead and elect to be an S corporation. An S corporation has to pay the owner, if he's operating the business, a salary, but anything above the profits above their salary are actually paid out without being subject to self-employment tax or FICA tax. So if somebody makes $100,000 in a year inside of their S corporation, they could choose to pay themselves a salary of whatever they want, and that would be subject to FICA tax. But all the profit that's made above and beyond the salary is distributed without being subject to FICA tax. So, but once again, just like the Augusta Rule, the IRS says, well, you need to be paying yourself a reasonable salary for the work that you do. So reasonable is just not a concrete term, right? They try to justify it with saying, what would you pay somebody else to, to do your job in the company? What would you hire that out to do? So somebody, if I made 100,000, maybe I pay myself a $30,000 salary, and the other 70,000 is profit distributions, which are not subject to FICA tax. But once again, the gray area is the idea of being reasonable. And so there's a few many of these things, like the S corporation tax status, like the Augusta Rule, is always based on our own interpretations of what's reasonable. Hey guys, in case you hadn't heard, I created a completely free course on infinite banking that I really believe is the best course available in the IBC world. If you're looking to fully understand how the infinite banking concept really works, then go to livingwealth.com/escapethebank to get free access to the course. Once again, we're offering what I believe is the best course on infinite banking available totally for free. Just go to livingwealth.com/escapethebank to get access. Now, let's get back to the podcast. And I remember I learned about the Augusta Rule a long time ago. In fact, when I was just getting into business, I learned about the Augusta Rule. I learned about it back in 2014. And so it's 10 years ago. Yeah, it's 2024. It's 10 years ago. And that was the first year I implemented the Augusta Rule. So this is great. I'm going to save money on taxes. I'm going to rent my house for board meeting, and host a board meeting. My wife and I are on the board of my company, and we're going to rent it for, each month for 12 months of the year. Once a month, we're going to have our board meeting here at the house. We're going to pay $800 or $1,000 for the meeting. And we did all of that. The issue that I ran into, and I felt a little guilty. I mean, I'm filled with the Holy Spirit. I am a guy, by the way, who has a conscience, who also does not like paying taxes and thinks that they're already taking way too much of my money to begin with. So I'm perfectly fine living in the gray in tax strategy. But I remember feeling like at that time I was just getting into business. We didn't have a nice house, it was just kind of a regular house. It's like, what exactly is reasonable? And that's where I think some of the pitfalls of the Augusta Rule take place. I felt that inside of the Augusta Rule methodology that I was probably charging too much for the use of the space. And this is really where, no matter what happens, even though the Augusta Rule is completely legitimate, you really do need to speak to your accountant about how you decide to go about this, and make sure your accountant is 100% on board. So, by the way, a takeaway for this, if I just mention this really quick, is there is absolutely no question that if you are in business and your accountant has not brought up to you the Augusta Rule, you need to bring up the Augusta Rule to your accountant and see what they have to say about whether or not it makes sense for you to do it and what amount makes sense, and move forward with that. But the reality is, I just felt, I could probably rent my house for, at that time, like $200 a night, legitimately, and I was charging like $800 a night for this board meeting. And so this is what it all comes down to, and it's reasonable. I know people who are charging $2,000, $2,500 a night for their home, and some of that can be legitimate. I mean, if you do have a very nice house and you are hosting a board meeting there, or a retreat at your house for the company, or some sort of staff event at your house, and you have a very nice house that could very well go for $2,000 to have somebody come in and do that, then absolutely go for it. I'm just merely saying this is where the pitfalls come in, the idea of what exactly is reasonable. If I own an Airbnb in Tulsa and that house is renting for like $200 a night, and my house here in Kansas, where we live outside of Kansas City, maybe I can rent for $500 a night, typically like on a platform like Airbnb. Then the question is, do I want to charge $500 a night, or do I want to try to push the limits and charge a higher amount? Because at $500 a night, that's $6,000 for a year. Like if I was to do 12, board meetings monthly, and honestly, for 12 months of the year, at $6,000 deduction to be able to kind of keep the paperwork, the board meetings, the board minutes, and just kind of go through it all, just wasn't really that exciting to me. And so by the way, if we go back to 2014, I kind of decided to stop doing the Augusta Rule. I stopped doing it for a period of time just because I didn't feel right about it. I felt like I was just gaming the system, which I'm maybe not as opposed to now as I once was. But the real reason that it wasn't really that I like paying taxes to the IRS, and so I decided to stop. Of course. It was more, it wasn't worth it to me to have anything that I'm doing under a microscope with the IRS. And this is the idea with tax loopholes, tax strategies like this that can kind of be pushed against, is that you are more than welcome to do all of these things that you hear on social media that your accountant tells you to do. And I say you should. If you talk to your accountant about the Augusta Rule and they say it's perfectly acceptable, here's what I would do, and here's how you document it, and here's the meeting formats and so forth, do it. And if it puts you under a microscope, that's fine. But deep down, all of these things that are perfectly legitimate and perfectly legal, things like having your company own a vehicle, perfectly legitimate, perfectly legal, just like the Augusta Rule. Where it gets a bit hazy is how much are you using this vehicle personally? How much of this vehicle use are you using for business? Can you really deduct 100% of the cost of owning that vehicle, or is it going to be personal? So like for me, what I do, and I learned this from Ray, was I purchased a vehicle in my company, and the company operates it, deducts everything around the vehicle, but I make a lease payment to my corporation for personal use. That's what I do. So I just kind of threw a number out there of what I wanted to lease as a lease payment, just because I know I am going to use it personally. Some months maybe it's more for business than personal and so forth. But the idea was I'm going to pay some so that I have a legitimate thing to show. Yeah, it's like, yeah, I understand. I'm not using this 100% for business. I'm paying the company a revenue source to use the company vehicle occasionally for personal use. And so all of this to say, any tax loophole, perfectly legitimate, go for it, but just be wise about it. The same thing goes with the Augusta Rule. You are perfectly allowed. It is legal. It is legitimate for your corporation. If you're in business, an actual operating business or an investment business, it's perfectly legitimate for you to rent your home for board meetings, events, staff meeting, retreats, all sorts of things. Invite people in, have dinner, talk about the business, and rent it for the day from your personal name, and claim that. Have the expense come from the corporation, write that off, and all the while you don't have to claim it personally. All this perfectly legitimate, but just make sure that this whole idea of what's reasonable is at the forefront, and that is fully confirmed by your accountant. They sign off on it. They say, yes, that makes sense. That's reasonable for a house of your size with the amenities that you have at the house. Maybe you have a pool. Maybe you have a hot tub, and it's going to be, I don't know, just trying to jack up the price of the house. And so you can get more and more tax-free money out of your corporation into your own pocket and enjoy doing it. All that to say, it is so to sum it up, the Augusta Rule, you can rent your space, your home, your personal home to your corporation or anybody for up to 14 days. And the income that you receive is tax-free up to 14 days of rental income for the year. Perfectly legitimate. Your corporation can rent your home from you, expense the rent payments while you don't actually have to claim them because you apply for the Augusta Rule under 14 days of the year. Your corporation, by the way, should issue you a 1099 miscellaneous form for the rent that it pays you. So that is going to show up on your tax side, but then you had to claim the Augusta exemption, right? You have to claim the exemption in the tax code saying that, yes, we did receive this rental income, but no, we don't have to pay tax on it because we only rented it for 12 days of the year, not 14 days. Understand, while doing this, it might put you under a little bit of a higher likelihood. Anytime you do anything like this, it puts you under a slightly higher likelihood that you may end up getting under the microscope with the IRS. It's possible. So you have to weigh that. That's what I did back in 2014. I was like, it just wasn't worth it to me to put anything under a microscope with the IRS. I would just rather not be bothered by it. But as you move forward, the reality is you should take advantage of anything that you possibly can. Perfectly legitimate deduction. Talk to your accountant about it. And if they're on board and you're on board, the IRS is mostly on board, except for this idea of reasonable that you have to be aware of. But that's the case with so many tax deductions, tax loopholes across the board. So I hope this is fun. I hope you learned something. If you had never heard of the Augusta Rule, if this is the first time you ever heard of it, go ahead and send a comment to me. Ask questions about it. Whether it's on YouTube, wherever it is you consume the content. Give me a thumbs up, like, subscribe to content. No matter what, if this is the first you heard about it, it is time to talk to your accountants about it and see if you are a candidate for the Augusta Rule. Thank you guys so much for being here. This has been Dollars and Nonsense. If you follow the herd, you will be slaughtered. For free transcripts and resources, please visit livingwealth.com/E222.